Welcome to The Explainer. Today, we're going to try and make sense of one single, pretty chaotic day in the news. March 10th, 2026. It was, one of those days where every piece of good news seemed to have a but attached to it, and the global economy was sending some seriously mixed signals.
Okay, so let's just dive right in with the day's biggest source of confusion. These totally contradictory signals coming out of the White House about the war with Iran. On the one hand, you have President Trump saying the conflict is, well, pretty much over. But then, almost in the same breath, he threatens to escalate things. For the markets, you can imagine, that kind of whiplash is just a recipe for major uncertainty. And as you'd expect, all this geopolitical drama, it sent immediate shockwaves through the single most critical commodity on the planet, oil. Now, what's really wild about this is just the absolute roller coaster ride it shows. I mean, sure, we see oil pulling back from a crazy high of nearly $120 a barrel, and that might seem like good news. But if you zoom out, the bigger picture, a 34% surge in just 10 days, tells you that the underlying anxiety in the market is still incredibly high. And listen, this isn't just about numbers on a screen. This is about a critical artery for the entire global economy. Think about it. A full 1/5 of the world's oil supply has to sail through this one narrow waterway, the Strait of Hormuz. When that's at risk, believe me, the whole system feels the pressure. So how did Wall Street react to all this back and forth? Well, it's kind of funny because depending on which headline you happen to read, you got a completely different story. The confusion was, you could almost feel it. And this slide just perfectly captures that split personality. You had some outlets saying, calm returns to Wall Street. Well, at the exact same time, the futures market, which is what predicts how the day is going to open, was pointing down. One headline says, all clear. The other says, brace for impact. It is the perfect snapshot of the day's total uncertainty. And the numbers really tell the same story. Look at this. Markets in Asia and Europe, they rallied hard, right? They were hoping the worst was over. But back in the US, Wall Street was way more nervous, with futures tilting just a bit negative. And the reason for that hesitation, well, it was something much closer to home, uncertainty about the Federal Reserve. But right in the middle of all this chaos, something happened that served as this timely reminder of a really key stabilizing force in the US economy. And that's this whole principle of central bank independence. So Fed Chair Jerome Powell was actually named Governor of the Year. And get this, it was specifically for defending the Fed's independence from political pressure. On a day just packed with political noise, this award was a powerful signal to the markets that the Fed was going to be driven by economic data, not by headlines. Okay, so let's shift gears a bit. Let's zoom out from Wall Street and take a look at Main Street, because the latest Small Business Optimism Survey gives us this picture of the real economy, which, doesn't always line up with what the stock market is doing. And what we see here is this really fascinating, almost bizarre disconnect. On the one hand, business was surprisingly good lately. Small businesses reported the best actual sales numbers they've seen in nearly 4 years. But when you ask them about the future, they're deeply pessimistic, expecting sales to drop off. And this chart shows us exactly why they're so worried. Inflation is still one of their biggest headaches, right up there with just trying to find good workers. It's these persistent pressures that are really fueling that gloomy outlook for what's coming next. And yet, here we go again with another contradiction. Despite all that pessimism about the future, look at this. The vast majority of business owners, we're talking 67%, still say their business is in good or excellent health right now. It perfectly captures the mixed-up mood of the day. Things are okay for now, but we're bracing for trouble. So what does all this, the war, the oil prices, all this business uncertainty, what does it actually mean for the average person? Well, the most immediate, and let's be honest, the most painful connection starts right at the gas pump. This is where geopolitics hits your budget. Directly. Gas prices jumped to an average of $3.54 a gallon. That's a huge increase in just a couple of weeks. And for families already stretched thin by inflation, that is a major, major blow. And you can see this pressure popping up in other places too. It is no coincidence that on this exact same day, a report from US News was highlighting the top credit card for, get this, essential spending. That tells you everything you need to know about where people's heads are at. The focus is squarely on just managing the rising cost of necessities like gas and food. But here's the really critical question. How equipped are people to actually handle this financial pressure? A new survey reveals this really worrying gap between how people feel about their money knowledge and what they actually know. This data suggests this really worrying overconfidence. You have more than half of people who feel very knowledgeable about their finances, yet at the same time, more than half don't even know what a FICO score is. That's a little 3-digit number that pretty much every lender uses to decide if you're a risky bet. In a tough economy like this, that gap between feeling confident and actually understanding the basics, man, that can be dangerous. So, after a whole day of contradictions, where every answer just seemed to lead to more questions, where does the story go from here? Well, we actually won't have to wait very long to find out. The next major piece of the puzzle is literally right around the corner. Tomorrow morning, 8:30 a.m. sharp, we get the next critical clue, the latest inflation numbers from the Consumer Price Index report. This number, this is the big one. It's going to tell us just how hot the economy is actually running. And that brings us to the ultimate question that today's chaotic events have all been building up to. Is that inflation number going to be so high that it forces the Federal Reserve to keep its foot on the brake? Or are we finally seeing signs that maybe the economy is starting to cool down on its own? The answer to that is going to shape the next chapter for all of us.